Hello students, this is Dr. Hemendra Sharma from Babu Banarsi Das University, Lucknow. Today I am here to teach you on entrepreneurship and small business management. To begin with, today's topic is role of financial institutions. What do we understand or what is the importance of financial institutions in entrepreneurship? As we all are aware, whenever we are looking forward to establish or to start up our own enterprise or our own organization, we require certain assistance. So in that case, capital plays a very important role. You yourself has to arrange certain own personal funds from your friends, relatives, and near and dear ones. But apart from that, on a longer duration, we require for running of the smooth conduction of the operations and running of the organization, we require certain assistance from financial institutions. So these financial institutions in the current scenario of the country plays a very pivotal role in the growth of the entrepreneurs. Organizations like NABARD, SIDBI, regional cooperative banks, all are providing the assistance for the growth and development of the entrepreneurship. Now, to begin with, what is the role of financial institutions? Our financial institutions plays a crucial role in the overall development of a country. The most important constituent of this sector is the financial institution. They have traditionally been the major source for long-term funds for the economy. The government of India, in order to provide adequate supply of credit to various sectors of the economy, has developed structure of financial institutes. They can be categorized into four major institutes: All India Development Banks, specialized financial institutions, investment institutions, and state level institutions. So as you can see, the government of India has established certain institutes on certain categories, so that depending on the need and requirement of particular industry or particular category of the nature of your business, the institutes are there who are going to assist you for the financial usage that will help in the growth of your enterprise. So to begin with, in continuation, in this context, Government of India started a series of financial institutions since independence to provide term finance to the industry, such as IFCI, SFCs, ICICI, IDBI, Unit Trust of India, National Industrial Development Corporation, and National Small Industries Corporation, etc., to further facilitate the development of entrepreneurship in the country. So as you can see, how these institutions are helping the growth of entrepreneurs in the country, and to specifically, the government of India has specified certain institutions who are responsible for providing the financial institutions to the entrepreneurs. National Institution Corporation. Let us understand what this institution is all about. The NIDC was set up in October 1954 as a statutory corporation owned by Government of India. So this is, to begin with, one of the statutory corporation which is owned and controlled by the Government of India, established in October 1954. What are the functions of National Industrial Corporation? To formulate and execute projects for setting up new industries, to provide consultancy services, to finance the rehabilitation and modernization of certain industries such as cotton and jute textiles and machine tools. It is a financial PSU, a wing of Ministry of Commerce and Industry, Government of India. So as we can see, it is not only providing or formulating or executing the project set up by the industries, it also provides the consultancy services. It also helps in the rehabilitation and modernization of some specific industries, to name few: cotton, jute, and machine tools industry. So these are few of the industries which the government is assisting in the modernization and rehabilitation of these particular industries. Another is your Industrial Development Bank of India, that is IDBI, for coordinating the activities of the existing financial institutions. it became necessary to set up a new financial institution. Hence, a decision was taken by the Government of India in pursuance of the above object to set up a new institution to be called Industrial Development Bank of India. The Government of India introduced the IDBI bill in Parliament in February 1964. Initiating the discussion on the bill, the then finance minister emphasized the need for an institution like Development Bank to arrange medium and long-term loans for industries. The IDBI was set up as a wholly owned subsidiary of the Reserve Bank of India (RBI) on July 1, 1964 under an act of Parliament. In February 1976, the IDBI was declined from the RBI, and since then it has become in itself an apex institution in the field of industrial finance. The bank was taken over by the Government of India in 1976. The main object of setting up this institution have been to bridge the gap between demand and supply of finance by providing direct financial assistance to industrial concerns wherever necessary, and to bring into existence an apex body to coordinate activities of various financial institutions providing term finance to industries. Therefore, IDBI has been created not only as a financial agency but also for the purpose of integrating activities of all the financial institutions, providing short, medium, and long-term benefits for the country. So as you can see, the Government of India in 1964, in February, has passed a bill for the establishment of the new institution by the name of Industrial Development Bank of India. It was earlier being monitored and being governed by the Reserve Bank of India, the apex financial institution of the Independence India. Post a certain time in 1976, RBI declined to take it in itself, the IDBI as a body. So as it IDBI in itself become an apex institution, and since then it is being running in itself as an independent organization. In 1976 in itself, the government taken this IDBI institutes, and it is a wholly owned subsidiary of the Government of India. What are the functions of IDBI? The main functions of the Industrial Development Bank of India, as its name itself suggests, is to finance industrial enterprises in both private and public sector. Financial assistance is provided either directly or through special financial institutions. To start with, direct assistance. IDBI assists industrial unit directly by way project loan, underwriting of, and direct subscription to industry securities, share and debenture, soft loans, technical development fund loans, and equipment finance loan. IDBI provides direct assistance for project costing more than rupees 3 crores under the project finance scheme. Indirect finance. IDBI indirect assistance is provided basically to tiny, small, and medium enterprises, mainly by the way of refinance of industrial loan granted by SFCs, SIDCs, and commercial banks, cooperative banks, and regional regulatory bank, regional rural bank. Rediscounting of bills arising out of safe of indigenous machinery are deferred payment basis. Seed capital assistance to new enterprises, never generally through SFCs and SIDCs. Special assistance, IDBI Act 1964 provide development assistance fund. This to be used by the IDBI to assist those industrial concerns which are not able to secure funds in the normal course, either because of heavy investment or low rate of return, both. So as you can see, the IDBI Act 1964 provide special assistance to the organization to secure funds in the normal course, either because of heavy investment or low rate of return in both the cases, depending on the case to case basis. So as you can see about this particular system of your IDBI. Direct assistance to industries. The IDBI has been empowered to finance industrial concerns directly under the following structural arrangements: to grant financial accommodation up to a 16-year period for export of capital goods and other commodities, to grant loans or to subscribe to the shares and debentures of industrial concerns. Such loans, advances, and debentures can be conveyed into equity shares at the option of the bank. To underwrite new issues of industrial concerns and accept discount or rediscount bona fide commercial bills or promissory notes of industrial concerns. To guarantee deferred payment system due from industrial concerns for loan raised by them in the market or from scheduled banks, etc. So as you can see, IDBI has providing the direct assistance to the industries at under certain conditions for a tenure of 16 years, providing loans and advances to subscribe for share and debentures for industrial concerns. Another point is assistance to other financial institutions. IDBI has carried out the following refinancing functions. IDBI can refinance term advances of 3 to 25 years maturity made to industrial concerns by IFCI, SFCs, and other financial institutions which may be notified by the government. It can similarly refinance term loans of 3 to 10 years maturity made by scheduled bank and state cooperative banks. It can also refinance export credit of 15 years maturity where primary lending institutions grant loans to a person in India and to persons outside India repayable within a period of 12 years. Creation of development of assistance of funds. The bank created a development assistance fund in 1965 with an initial contribution from central government. This fund is intended to provide assistance for industries which for various reasons like heavy investment involved or low anticipated return on capital may not be able to obtain funds in the normal course. The prior approval of the central government is necessary for any assistance from the fund. Soft loan scheme. The soft loan scheme came into existence in November 1976 for financing the modernization program of 5 selected industries, namely cotton, textiles, jute, cement, sugar, and specified engineering industries. The scheme aims at modernization, replacement, and renovation of industry, which has become necessary to achieve a more economic level of production in order to enhance their competitiveness in domestic and international markets. Technical Development Fund Scheme. Technical Development Fund Scheme was introduced in March 1979 with the object of promoting fuller capacity utilization, technologies upgradation, and export development. The fund can provide foreign exchange for small value imports with the object of procuring technical know-how, foreign consultancy services, drawings, and designs. Automatic refinancing scheme. The main features of automatic refinancing schemes are as follows. Sanction and disbursement of refinance in respect of loans up to rupees 5 lakhs from the eligible institutions to small scale industries, including those in the tiny sector, which are normally covered under the IDBI credit guarantee scheme. The IDBI will not levy commitment charges on credit institutions in respect of refinances under the ARS. Only one journal agreement will be taken from the eligible institutions covering draws of refinance under different schemes of the IDBT. Rediscounting. IDBI has introduced a scheme for rediscounting of bills against the sale of machinery to enable the indigenous machine manufacturing industry to purchase equipment on deferred payment basis. So as you can see, all these points from IDBI is providing that varied industries in different forms, from the creation of development of assistance funds to soft loan scheme, technical development fund scheme, are all the objects by which the growth of the entrepreneurs can take place in the country. Required flexibility and provisions for assistance time to time. Certain segments, certain people are being assigned so that the amount of sanctioned loan is being taken care properly, and the proper utilization of these funds into the industry for which the entrepreneur has sought these loan are being monitored on a regular basis. These funds are basically for the industries which are not very much profit generating or are facing certain financial difficulty in obtaining the loan from other courses. So by all these means, we can understand that IDBI is playing a very pivotal role in the growth and development of the entrepreneurship in varied industries for the uh, government and for the people who are willing to, get into the business of such and such trade. NABARD, National Bank for Agriculture and Rural Development. NABARD is designated as an apex development bank in the country. This national bank was established in 1982 by a special act of the Parliament with a mandate to uplift the rural India by facilitating credit flow in agriculture, cottage and village industries, handicraft and small scale industries. It is also required to support non-farm sector while promoting other allied economic activities in rural areas. NABARD functions to promote sustainable rural development for attaining prosperity of rural areas in India. So as you can see, the role of NABARD is for basically aiming towards the cottage, village industries, handicraft, small scale industries, and for the upliftment of the rural India, people dealing in the agriculture sector. So the aim for establishing this in 1982 was to designate this as an apex development bank, which in the rural India for the growth of agriculture sector can play a pivotal role. It is basically concerned with matters concerning policy as well as planning and operations in the field of credit for agriculture and other economic activities in rural areas in India. It is worth noting with reference to NABARD that RBI has sold its own stake to the Government of India. Therefore, Government of India holds 99% stake in NABARD. What is the role of NABARD? Certain designated areas being targeted by NABARD. So what are those? Let us understand. It is an apex institution which has power to deal with all matters concerning policy, planning as well as operations in giving credit for agriculture and other economic activities in the rural areas. It is a refinancing agency for those institutions that provide investment and production credit for promoting the several developmental programs for rural development. It is improving the absorptive capacity of the credit delivery system in India, including monitoring, formulation of rehabilitation schemes, restructuring of credit institutions, and training of personnel. It coordinates the rural credit financing activities of all sorts of institutions engaged in developmental work at the field level while maintaining liaison with Government of India and state governments, and also RBI and other national level institutions that are concerned with policy formulation. Another apex institution is National in National Small Industries Corporation. The National Small Industries Corporation Limited was established by the Government of India as a public sector company in 1955. Its main functions are to arrange the supply of machinery and equipment, to arrange provision of financial assistance, to provide assistance for arrangement of raw material, to aid establishment of technology transfer centers, to make arrangement of marketing assistance, to ensure priority in government purchase program, to promote, aid and foster the growth of micro, small and medium enterprises in the country, generally on a commercial basis, to provide a variety of support services to micro and small enterprises, catering to their different requirements in the areas of raw material procurement, product marketing, credit rating, acquisition of technologies, adoption of modern management practices, arranging for business partners, ensuring technology transfer programs through missions, delegations, and expositions. Another is your Khadi and Village Industries Commission. Khadi and Village Industries Commission was established under the Khadi and Village Industries Commission Act 1956. It is a statutory organization engaged in promoting and developing khadi and village industries for providing employment opportunities in rural areas, thereby strengthening the rural economy. So just like NABARD, it is also looking forward for the growth and development of the rural India, especially for the khadi and village industries. The main reasons for its formation are the KVIC has been identified as one of the major organizations in the decentralized sector for generating sustainable rural non-farm employment opportunities at low per capita investment. This also helps in checking migration of rural population to urban areas in search of employment opportunities. New reform programs are undertaken which aim at revitalizing the khadi sector for enhanced sustainability of khadi, increasing incomes for spinners and weavers, increasing employment, enhancing artisans' welfare, and gradually enabling khadi institutions to stand on their own feet. So khadi and village industries is basically promoting the rural growth of the rural economy, providing the sustained development, and for the non-farm activities which are related to khadi and village industries norms. Next is your IFCI, Industrial Finance Corporation of India Limited. The Industrial Finance Corporation of India was set up by the Government of India under IFCI Act in July 1948. It is an important financial institution which gives financial assistance to the entrepreneurs through rupee and foreign currency loans, underwriting, direct subscriptions to shares, debentures, and guarantees. It also extends other financial facilities like equipment procurement, equipment finance, buyers and suppliers credit, equipment leasing, and finance to leasing and hire purchase companies. The IFCI has devised new promotional schemes such as consultancy fees, subsidy schemes for assisting small scale entrepreneurs in marketing sector, interest subsidy scheme for women entrepreneurs, pollution control in small and medium scale enterprises, encouraging the modernization of tiny, small and medium scale industries, Industrial Credit and Investment Corporation of India Limited, termed as ICICI. Another point or another financial institution, apex institution in the independent country of India. It was established by the Government of India under the Companies Act 1956 with the objective of providing financial assistance to small and medium scale sectors. The main functions of ICICI are as follows. Financial assistance is extended by way of rupee and foreign currency loans, underwriting, and direct subscriptions to shares, debentures, and guarantees. Financial facilities such as deferred credit, leasing credit, installment sale, asset credit, and venture capital are given by ICICI. It also guarantees loans from other private investment sources. Small scale units are the major beneficiary of the ICICI assistance. The another apex institution is SIDBI, Small Industries Development Bank of India. SIDBI was established in 1989 as a subsidiary of IDBI under a special act. The main functions of SIDBI are the promotion and development of small-scale industries by way of financing. It commenced its operations from 2nd of April 1980 with its head office at Lucknow. The initial authorized capital of SIDBI was 25 crores, which can be extended up to 1000 crores. The functions of SIDBI are as follows: to promote small-scale industries in semi-urban areas to create more employment opportunities, to undertake technological upgradation and modernization of existing small-scale industries, to expand the channels for marketing the products of SSI sector on both domestic and international markets, to extend seed capital or soft loan assistance under National Equity Fund Scheme, Mahila Udyam Nidhi Scheme, to generate direct assistance and refinance for exports of small scale sector, to provide financial assistance to SFCs, SIDCs, commercial banks, RRBs through existing credit delivery system, to provide factoring and leasing services, to provide financial assistance to the institutes, organizations for undertaking EDPs, entrepreneurship development programs. A special emphasis and the new schemes of assistance for marketing support to the small scale sector. Another financial institution name is Industrial Reconstruction Bank of India, IRBI. The IRBI was set up in 1971 under the Companies Act to act as an agency to rehabilitate the sick units. But in the year 1984, the government of India renamed the IRCI as Industrial Reconstruction Bank of India by an act of parliament. Thereafter, it acts as a reconstruction agency to revive, reconstruct, and rehabilitate the sick industrial concerns. IRBI plays a significant role in promoting entrepreneurial and industrial development in the country by performing the following functions. It provides financial assistance to industrial concerns. It acts as an agency of state government, union government, and other financial institutions as per the authorization of the government. It provides consultancy and merchant banking services for reconstruction and development of industrial units. It also helps in providing infrastructure facilities, raw material, machineries, and other tools on the basis of hire purchase and lease schemes. Another is state financial corporations. IFCI provides financial assistance only to large-sized industrial undertakings. In order to cater to the needs of the small-scale units, the Government of India passed the State Financial Corporations Act in 1951, under which the state financial corporations were set up. The first SFC was set up in Punjab in 1953. Today, there are 18 SFCs functioning in the country. State financial corporations are managed by a managing director, board of directors, and the executive committee is headed by a chairman. The functions of SFCs are as follows: to advance term loans to small scale and medium scale industrial units. To it underwrites the issue of stocks, shares, debentures, and bonds of industrial units. It grants loans to industrial concerns which is repayable within a period not more than 20 years. It subscribes to debentures floated by industrial concerns. It provides financial assistance to small road transport operators, tour operators, hoteliers, hospitals, nursing homes, etc. Thank you, students.